Welcome to Trading Lounge and the US indices for Thursday, August 18, and starting with the S&P here. So what I want to do first is I want to have a look at all the possible counts within reason. So let's do that. So first of all, we can count this up here as 1 and 2 and 3 and 4 and 5. That's our primary count for wave A or wave 1, and then coming back for the ABC here for wave B or 2. Now as a wave B, we go to wave C up here of wave B, and then we go down at that point. Otherwise we've got wave 2 here and we go up into wave 3. Either way, this is our long trade here, and as it progresses we'll decide what we need to do along the way. The other point here is that this here can be an A wave, a B wave, and a C wave being finished here, as we looked at yesterday, I think it was, just on this clean chart here. So down for an A wave, an A and a B and a C wave here with 1, 2, 3, 4, 5 up here. It's in the 50-60% retracement level there. You know, that's going to play a part in pushing it back down, but so is the, you know, coming into a wave 4 as well. But it's possible that that we could just come down into another leg here for this. So we'll need to be mindful of that, and we'll understand that along the way. But as it stands, this here as 1 and 2 and 3 and 4 and 5 here, this consolidation here is the area where wave 4 can pull back. So from wave 3 up here, wave 4 here. So along the way here, we'll try to understand it, see if it's got any more scope to the downside. So that will be one of our little side projects along the way, because we don't particularly want to get caught out, and there is a good case for an A and a B and a C here, you know. So just on face value, you know, not bringing the stock market into it. I mean, this is the stock market, but without yeah, looking at all the stock counts. So yeah, anyway, there's that. So we'll just go back to the daily chart for one moment. So now we know that we've got this here as an A and a B and a C wave to this point, and we'll monitor that wave 4 coming down. Okay, wave 4 can come to this consolidation over here. Sometimes they're a bit shorter. We'll keep an eye on that as well. We'll also keep an eye on the stock market, all their wave 4s as well. Some will be deep, some will be shallow. We need to figure out what type of pattern we got out of the 11 or different 12 types of patterns in Elliott. Wave 4 contains most of them. So yeah, but otherwise wave 3, wave 4 we're going for now, and going up for wave 5. So we're calling a top in for wave 3, and we're looking at wave 4, and possibly we'll keep an eye on a move going deeper. So let's just cruise to the intraday. I think we've got I think we've got something on 5,000 ticks here. So yeah, and we just clean this up a little bit. Things move along. So yeah, this is the wave 4 here. Okay, so I've altered this a little bit, but still is wave 4 at 4,100. And just to clarify that, if we take wave 2 low to the top of wave 3 here, roughly speaking, the 38.2% retracement level comes in, you know, on that wave 4 there anyway. So both meet up in this area here. So but we do know that wave 4s can be shallower, so we'll look for it to start with here, but they could be further up here, and you might be just up to here on this support. You know, these sorts of things we need to be sort of need to understand. These can be placed over here. So the question now is that, well, the good news is that we've got a clean 5-wave structure to the downside. So in a nutshell, we can short under here. We'll get closer to the market, but because that's 5 waves here, you'll be able to short, well, in this area here as well. But anyway, that's that. So the question is here is that with a lot of the stocks that I've got, I might look a little bit silly, but some of the stocks we've got, we can put the A wave here, the B wave here, and the C wave here for this, and have this here as that. So we'll need to keep an eye on that, okay? But the wave 4 coming back into this space, I've lost my 4100 area there. So the other thing that could occur here, if I can just toy with this for a moment, is looking at this as wave 1 here. I don't know which one is correct. I'm just pointing out the two things that that's jumped out at me as wave 3, 4, and 5 here, as the A wave here, then the B wave, and then the C wave. That looks a little bit more wholesome that way, doesn't it? You know, feels about right. Either way, if you're shorting here, then the 4.2's the target to the downside. And you can add when the 450 here becomes the retested resistance as well. We need to look to be able to short up under here as well for that. So we're going to have a look at that. So there's two things here. The A wave is 1, 2, 3, 4, 5, and then a B wave in 3, and then 5 here. Now that's just a simple ABC correction. Now it may be like that. It may. Like I said, we could end up with a triangle here. We could end up with something, all sorts of things here. We don't know yet, but we should end up lower here. And now we have that 5 waves, which is fantastic. So based on that, we'll go to the 100 ticks, and let's just get a bit more data in here. So this is where our focus is at the moment. This first 5 waves down here for possible wave 1 here, and wave 2 that's pulled back up to the 4.3, the closest largest number in that area there. And you know, the thing here is that once it takes out this low here, this is 4,300, group 1 above, group 2 below. So that's the swing range for this number. If the 4.3 here, the 4.30 became the support, we'd be looking to go long. If this area here becomes the retested resistance, then we'll be looking to go on the short side. So that's really it in a nutshell. Like the first step is if that becomes the resistance, we can look to short from that point. And that would be, because if this becomes the resistance, the market's leaving this number and going down to the next number. So in this case, along the way here, we've got the trading levels between 2 and 300 here is 1, 2, 3. So group 1, in this case, it's 10, 20, and 30. So the market's going to get pretty bumpy coming into this space. And then we've got 50 here, the midpoint. So 1, 2, 3, 5, and 8, the Fibonacci sequence. And we can just leave it at that. So those levels will become important along the way. You'll be able to look to add with a classic trading levels pattern on this area here. We can also look to short under here. The thing here is that if we just break this down a little bit, we can look at this as wave 1 and 2 in here. And then we can also look at this, if we just expand this up a little bit here and expand it out, we can look at this as 1 and 2 here, and maybe 3 to there, 3 to there. I think 3 to there will do the job. Anyway, doesn't matter too much. Wave 4 there, and wave 5 here. So the next thing is that because we've got these 5 waves here, I think that's all okay. Could be another 4 here, but what we could do, we might get lucky and this could retrace back up 50-60%. So this is the 61.8% and the 50, and I'm going to bring it down to the 40 here. Because we've got 2 sets of 5 waves here, it means that we need to short the rallies. So we're going to paint that green. And maybe we go into this. Maybe we just drop straight from here. Maybe we can look at this as the A wave here, a B wave coming down here, and a C wave up here for the wave 2. You know, I don't know if that's going to happen, but this low here, if that's breached now, we need to be short on that point. So yeah, so this, we may get a move up to here and then down again, and we may not. And then you can also look to add under the 65. This is all of group 2 here, so we just talked about that. So we can look at this 65, 72 and 80. So we can look at this as the resistance here as well. So basically we're looking at, to keep it very simple, we're looking, if this is the level here, the market comes down, bounces off it, goes through it, goes back and checks it. Most of the time it goes back above the top and then goes down, but that low and that low, so you want your triggers from the lows coming up, but most of the time the market will come back up above, that's the wrong one, come back above the levels, that's on the long side. So when it comes through here, most of the time it goes back above and then goes down, then you've got to start again. Sorry about that. I don't know how to get rid of that dude. He's creeping me out. So yeah, so basically the first low below the level there you can look at, and then it kind of just confirming that the 65 is becoming the retested resistance at that point, because you want the market to confirm things for you as it moves along, and then you take action on that confirmation, you know. But yeah, that's about it at this point. So yeah, the only thing that could go wrong here is that this here is the A wave here, the B wave here, and the C wave down here for this instead of wave A, you know. That's why trading down from getting this little chunk here, because we're in a corrective pattern. It's not like we're in a trend. We can't stay in it forever, you know, but getting most of this here, there will be a strong bounce off the 3 here that normally goes back to the 4, but can go back to the 5. So if you're thinking about an area to take some money off the table, it's here. And then you would also look to add under here. There'll be a classic, this area here will get this pattern here. There will be this, and this here. So you can just wait for the opportunity. You can sell on the bounce up here as well. Okay, but that's where we are. So let's move along now. So I'll just rehash this. So we can have an A wave, a B wave, and a C wave here, and that's the end of it, and we go up from that point. So we see Thursday being the bear day, and we see Friday and Monday being the bullish days. That's possible. It's also more likely to see this here as 1, 2, 3 down here. Put this over here a little bit more for wave 4. All of this here will be 1, 2, 3, 4, 5 for the third wave here, the fourth wave here, and then the fifth wave coming down here for the A wave, and then the B wave over here back in 3 waves. So really trading to this number here is pretty much the good thing to do, and then we just wait for a rally and we'll try to figure out that rally. And the rally, if it is going to be a B wave, it could be it'll be something like this. We can short it under here, we can draw a line through here, because we've got to be careful it's not wave 1, 2, 3, 4, 5 and heading up on the Friday for that too, you know. We need to see yeah, we've got to work things out. Wave 4s can get tricky, so always good to trade less. It's not like we're building into a big trend to the downside. Well, we could be if this top here is not we're looking at it being wave 3, but if it's wave C, that's going to be very exciting for the bears at this point, you know. Alrighty, so that's it in a nutshell. But let's have a look at the rest of the market. So the NASDAQ here, once again, we've got that 5 waves down here. So you'll be able, the wave 4's back over here at the 13,000. So Do we look at this as the A wave, the B wave, and the C wave, and just coming down to here and then moving off? You know, we would want this wave 4 to be bigger than this wave 4. So this first move here is a little bit bigger than this first move here. So it could be something like that. We may just get sort of something like that for the Thursday, and then pushing up on the Friday. So we have to be a bit careful. If it's going to be any bigger, then we'll look at this as wave 1 here, 2 here, 3, 4, and 5. And then an ABC for 4. I mean, I'd expect something bigger, being a minor degree here, because really what's happening here, this wave 2 to wave 3 here, this wave 4 is to rebalance that whole trend. That's what it's, you know, in summary. Anyway, you can basically start to just do the same things we've just done then. So you'll be able to short under here. You may be able to get a position a little bit higher up here, you know, on some sort of little retest here, and taking the bottom out here is also good as well for this. The 500 here is the important number here. It can't find support on that number. So yeah, and keep your stops above here, up above here somewhere. And the 400 and the 300, they will all, the market, this is, well, group 1 is 1, 2, and 3 here. So there'll be a strong bounce off the 300. Well, you can see it's going to happen here anyway. So trading to the 300 is basically where you want to be sort of getting to at that point, because that will bounce back to the 400. The Russell, so with the Russell here, once again, we're looking at, we haven't looked at this 10,000 tick chart for a while, but the 38.2% retracement level is back down here, so it's possible that it can come back to that space. Will it come back to that space? Is this just the A wave and the B wave already completed here, and we're going into the C wave here? So this is what I'm not quite sure about at this point. We'll just have to give it a little bit. We'll have to give it a little bit of time. The C wave, you know, if this is going to be wave 1 and 2 here, then wave 3 is going to come down quite quickly. If it's going to be a C wave, it's going to be on more of an angle. I'm probably dramatizing it a little bit, but this is what we need to figure out at this point. But anyway, if you don't want to trade any of this, that's fine. Let's just go to, that's 10,000. Let's go to, I don't know what we're on here, 100. Don't think we were on the 100, but I think I did update it. Okay, so I did. So yeah, it's come down quite strong here. It's gone back and tested this there. So really it's still within group 1 here with all of this, you know, and this is what I say, that's the swing range for this number here. It does appear to be 5 waves down. Probably see that as a corrective wave. Another way to look at this too is that approaching things from different ways is good. So we know that we've got the 61.8% sitting here for that. So if this was going to be an A wave, a B wave, and a C wave up here for the B wave, which is possible, let's just get rid of this for a moment, or even wave 1 and 2, it might be an A wave, a B wave, and a C wave here with wave 1 and 2 here, then it's going to push up to this point here, and then move down from that area. That's possible. It does appear though here, it does look like we've got wave 1, 2, 3 here, maybe to here, ABC for the 4th here, or all this, the 4th, whatever, and the 5th wave down. So we've basically got 1, 2, 3, 4, and 5 here, and we've got some sort of ABC. So really the 1980 here as a retested resistance, and you have best to wait for it. So you need that first low below the level, right? Then you can look to short under that. And then you can look to add under the 72 here, the 1972. Bad years for flares, but good year for music. And then the 65 here. So once again with this here, I don't know if we need to look at this as wave 1 here and 2 here, and we're coming down for another move at this point. But it does give us the opportunity, once the market gets into here, to build into here, and you know, at minimum we should get the same length as this one over here. So we can look at this down here, so getting down to the 1950. If the 1950 becomes, you know, if I had 3 positions down here, I'd take 2 off here, and then if the got a classic trading levels pattern at the 50 here, then I'd add those 2 back in, and then whatever, and then move down further to the next level and go down to 3 at that point, and you'll get a bounce off 3 at that point, because we don't know if we got the ABC at this point for wave 4 being here. We don't know that yet, you know, so you'll have to work this trend to the downside. And the DJ as well, so this is just the daily chart here, but once again, like the S&P, the Russell didn't go back up to its 61.8%, but it hit the 2000, which is, you know, a strong selling point. So here we could look at this here as the same thing, the A wave, the B wave, and the C wave up here. Not another B, but a C. Or we can look at it as 1 and 2 and 3 here, and would be coming back for wave 4, which will be in this consolidation area here, that whatever that, all those open and closes there. So we can just go say the 33 at that point. There will be, that's where that can come back to. I suppose we better just check. Yeah, it's right on those there. So the 33, because once you figure all that kind of stuff out, I mean, I do like a market where I see all the opens and closes, because I know there's, you know, there's something important there. You know, somebody's been, somebody's been buying at a certain price there, you know. So there's going to be support there. So yeah, all I know is that we should be coming back to this point. Will we go to this point, or will we come further down? That's something that we'll need to work out. We'll need to work out if the move down, this will be something we'll be doing. If we can figure out, and we might not see it in the indices, we might see it in 1 or 2 stocks, that this move here has actually got overlapping wave structures and it's corrective. And then we'll know straight away that, great, we got wave 4 in, we're going to be trading up to wave 5. You know, this will be the easier trade here. So we're on 5K with this. It'll be the same story. You can see this nice 5-wave structure down here, and then the correction back up. So yeah, look, there might be another, this is probably 5 waves as well. There might be a little rally in here. If there is a rally here, look to sell that rally on the premise that we've got this here as a 5-wave structure, but otherwise the safer trade will be taking the low out here. And just remember that you know, we're trading against the trend here, so that's extremely dangerous. So that means that you need to use less is more. So just be a bit mindful of that, you know. Okay, well, let's just see how the whole thing progresses here. Once again, this is the same thing here as well. Do we call this wave 1 here, or do we call it wave A here? That's something we'll be able to sort out in the next session. At the end of the next session, we'll see what type of behavior comes into this, how quickly this moves down. So yeah, alrighty, I'll leave it at that. Thanks for tuning in. Cheers.